Have you ever heard someone say, "I made money from trading," or "I lost money in the market"? But what is trading really? Is it gambling? Is it risky? Or is it a skill anyone can learn? Let's break it down in the simplest way possible. What is trading? Trading simply means buying and selling something to make profit. You buy an asset at a low price and sell it later at a higher price. The difference between the buying price and the selling price is your profit. People trade many things like stocks, crypto, forex, gold, and commodities. If prices move, traders look for opportunities. Types of trading. There are different types of trading. Day trading means buying and selling on the same day. Swing trading means holding trades for a few days or weeks. Long-term trading means buying and holding for months or even years. Each type depends on time, strategy, and risk tolerance. There is no one perfect style. Different traders choose different paths. How do traders make decisions? Traders don't guess blindly. They use charts, price patterns, indicators, and market news. This is called analysis. Good trading is not about luck, it's about probability and discipline. Is trading risky? Yes, trading has risk. Prices can move against you. Losses are part of trading. That's why successful traders focus on risk management, small losses, and long-term consistency. Trading is not get rich quick. Summary. So, to summarize, trading means buying and selling to make profit. It can be done in many markets. It requires learning, patience, and discipline. When done correctly, trading becomes a skill, not a gamble. Subscribe for more.